At the beginning of 2026, I think it's important to take a slight look back at 2025 around the predictions and what actually played out in reality. So if we look back on the year, I think it's very helpful to compare what the experts predicted at the start of the year and versus what actually then transpired. And I think this will give us some context as we look forward into 2026 in a few of the future sessions. Now, if we start off by looking at global growth and recession fears, in late 2024, we saw many economists being very afraid of 2025, that it could bring significant slowdown or even recessions in some major economies, and specifically then in Europe. We saw from an IMF report in early 2000 that there was projected a slight dip in growth from, I think, 3.3 in 2024 and predicting global growth at around 3.2 for 2025, and then warned of subdued prospects amid these policy shifts. And here too, I think the World Bank initially forecast around 2.7 global growth, which again, notably is caution, or was caution at the time. We also saw that headlines about gloomy expectations roughly around also the sort of June, July. Still that this pessimism coming through in forecast. So again, 2025 was forecast one of the weakest economies in years, or at least in recent memory. What actually transpired, this gloomy scenario didn't play out. Global growth ended up roughly on par with prior years, so in this 2.7 to 3% level, and no major economies fell into recession. That said, the UK came close, but it managed to give slight growth, and even Germany had positive growth. Now, also then is this upside a surprise? We saw in December the World Bank put out an analysis note that the world economy again exceeding expectations, demonstrating its resilience. And key factors that they put forward were the US economy's unexpected strength, which accounted for around 60% of global growth forecast. That was upgraded late in the year. And then a rebound in confidence after these mid-year fears that subsided. So I think this teaches us that baseline forecasts can definitely underestimate the resilient behaviors. Consumers able to tap savings or government intervention to stabilize, and that planning solely for worst case scenarios can cause missed opportunities. So a balanced approach is very important. So preparing for downturns, but being very ready to capitalize on the upturn is prudent. Inflation, interest rates, again, the topic for the last few years. And here too, the predictions were that inflation could continue to ease, and central banks would carefully pivot to cutting rates in 2025. And this largely came true. The surprise was perhaps how quickly inflation receded in many places without a deep recession, and really, again, a true soft landing for the US, and only moderate disinflation in Europe. Some forecasters worried inflation might prove stickier, especially given the wage growth and geopolitical risk, while the US did still have some core inflation slightly above the target. It was manageable, and elsewhere inflation fell near to targets. Central banks executed roughly as expected, which again saw then a pause in their gentle easing. So here too we see the lesson is much debated. Soft landing is difficult but not impossible. So 2025 showed it can be navigated with a bit of luck, and no new oil shocks and prudent policy. However, we also saw IMF rightly cautioning that risks like labor shocks and market corrections could, of course, tilt things. And again, this remains true going forward. Geopolitical risk and its predictions. Many analysts at the start of 2025 highlighted geopolitical risk as a wild card. If anything, those concerns were underscored by events we actually saw. The World Economic Forum outlook identified potential conflicts and trade wars as top immediate risks. And indeed, we saw the Ukraine war dragging out, Middle East tensions escalating, and trade protectionism surged within Trump's tariff agenda. And there was also a prediction that Trump's return could boost M&A through deregulation, which partly came true. We saw antitrust regulation did loosen in the US, facilitating deals like the rail. There was a larger rail merger, but some also warned that Trump's tariffs could be a headwind that also had merit, and tariffs created short-term inflation and uncertainty, though ultimately not enough to derail growth. So the geopolitical predictions were largely validated. The world is more fragmented. Businesses had to factor that in. We saw a silver lining. Dire predictions of global trade collapse were wrong. Trade flows adapted and even grew in volumes. The resilience of globalization, albeit it being reconfigured, was underappreciated. And businesses proved quite adept in rerouting supply chains with front loading and supply diversification to keep trade moving. And this also then suggests that while globalization is evolving towards more regional blocks, perhaps it's not imploding, and companies that maintain diverse market connections can weather protectionism better than expected. I mentioned M&A, so mergers and acquisitions, and here too a few interesting predictions made. Deal makers were actively optimistic about 2025. Many predicted strong uptick in M&A, meaning the market exceeding 4 trillion. And this was one area that really met or exceeded the forecast. And here too, thanks to robust economic conditions and factors we mentioned earlier. 2025 really saw volumes surpass 4 trillion, even hitting 4.8 by some estimates. Interestingly, one of the expectations was the US deregulation, specifically around antitrust. That could be a big catalyst, which was true to some extent. We saw more mega deals in the US, but the magnitude of tech sector deals, largely driven by AI, may have exceeded expectations. Also in Europe, we did see a bit worse than expected, which we saw declines in the UK, whereas the US outperformed. Here too, again, highlighting the US continued dominance still. In markets, many thought interest rate cuts and IPO revival could happen by late 2025, and this also happened, at least partially. The stock market rally 2025, the S&P 500 is up about 20%, also stronger than anticipated, and a testament to how quickly sentiment can shift once investors see inflation dropping and growth holding. However, obviously a few forecasts also fails. Firstly, the idea feared by some that deglobalization would severely dent growth didn't pan out, and the global economy showed it could absorb shocks like tariffs if it's not taken to the extremes. I will in a future video also talk about emerging markets and developed markets, and we'll see how that duality also plays out to how they interact with each other, also feeding into the positive sentiment or the positive results actually seen. So ultimately, 2025 taught executives the value of staying agile and not over-indexing on any single forecast. I think consensus swung from optimism to pessimism and back, but those who kept steady focus on fundamentals, so looking at customer demand, innovation, cost control, ended up navigating as well. So the year reinforced that The only constant is change. Companies must prepare for multiple scenarios. It also offers hope when amid political turmoil and post the pandemic adjustments, the global system proved more resilient than many thought. We again saw from a World Bank note, from a quote from Corsair, that has repeatedly defied expectations, consistently delivering better than the anticipated growth. And again, for leaders, I think this means balancing risk management with optimism, investing in future, even when the outlook is clouded, because negative scenarios often don't fully materialize. So looking back at 2025 was a year of stabilization and resurgence in the global economy. Um, Corporate executives entered the year facing significant uncertainty, war, inflation, political shifts. But by the end of the year, the narrative was one of resilience and opportunity. Developed and emerging markets alike managed to grow steadily. The feared economic hard landing was avoided. Instead, we saw a great reboot of corporate strategies, companies aggressively adopting new technology, reconfiguring supply chains, and went on the offensive with strategic deals. So the M&A boom again highlights this confidence that had returned, and that many businesses view transformative acquisitions as a key to thriving in a changing world. At the same time, 2025 also reminded us that the world remains fractured. Executives must steer through geopolitical current issues, from trade wars to societal polarization, which can disrupt these plans. So, for corporate leaders specifically and boards, the events of 2025 underscores the importance of being proactive and prepared. Those who led with vision, anticipated trends like AI, and positioning their firm accordingly, leaped ahead. Those who remained reactive or over rely caution may find themselves playing catch up in 2026. So the year lessons in leadership, deal making, funding, governance, I think can be summarized as stay strategic, stay nimble, invest in your core strength, including your people and technology, engage with the world, so markets and stakeholders, intelligently. If 2025 taught us anything, it's that even in a world of higher interest rates and political uncertainty, opportunities are still abound for those ready to seize them. So as we move into 2026, companies that internalize these lessons, fostering resilience, from a behavioral and capability perspective, but also operationally, adaptable strategies, and bold but disciplined leadership will be best positioned to chart the next chapter of growth and in an ever evolving global landscape. Thanks for listening, and looking forward to sharing some more thoughts.